Good morning, traders. Today is December 5th. I'm going to be uploading this video as a live trading session. It's going to be more long form, and I'll get into some of the details that I've been focused on with my indicator, trying to refine my overall strategy, and just in general trading.
Welcome to Many Millions, where we focus on the many reps and the million moments it takes to build a trading career.
Here's what I would say. I've lost now the two gauntlet accounts. Kind of YOLO'd them. I explained why I YOLO'd them. Wanted to get back to the basics, focus on a single account, and I'll show my stats in there. I'll get into it a little bit of where my mistakes have been, not being patient enough, taking too many trades, typical trader stuff, right? We tend to overtrade. We tend to jump at the first chance we get at a trade. And then maybe a little bit of what I've been doing that has made me a little bit more profitable. So in these choppy environments, I'm going to explain why the market is trying to tempt us, and I'm going to look through every tempting signal that I ignore, and I'll call it out when I see it. So first off, I have added, this is just the normal technical indicator here in TradingView for volume. I'll show you what that is. That's VRP, volume range, visible range volume profile here. I like having this, but it's new to me, so I'm still getting used to it. I don't love how much it kicks out into the chart here. But I do like seeing where the volume is. Is it bearish? Is it bullish at this level? And then you can see that I'm on my 3-minute time frame here on MES. And I have my indicator charting out. This is just the first visible resistance up here, right? So that's technically on the 3-minute chart. This is a 3-minute single resistance level. And you can see down here at the bottom, we've got a better support level. That's at least 2, maybe 3 with its thickness in opacity. I'm going to zoom out here to the 15-minute, see where we're looking. Yeah, I really don't love this thing. I think I'm going to shrink it down maybe just a little bit. Let's go 20 there. See if that helps. I don't want it to be a distraction. It's 4 times the size of the candlesticks. I've had some decent trades lately, but admittedly, I am trading a little bit more than I want to be. But it's been an interesting over trading. It's more that I enter the trade. What I'm looking for, I'm a little early, so that I'm working on some patience there. And then on top of that, when it doesn't move my direction almost immediately, I'll give it 3-4 minutes, let that candlestick close on the 3-minute chart. And if it's still not moving, I'm closing those. And you'll see if I get into my TradeZilla account, I'll show you how little of a loss I'm taking on those. It's been like $26 loss, a $40 loss. I'm not letting it pull against me to my stop loss. I'm realizing that I lacked some patience in entry and that I need to just step back and wait for that entry. I'd much rather take a $30 loss, wait for that A setup, and then take my full chance to hit the full stop loss at that point. But what I don't want to do is get in too early and then lose full stop loss, and now I have less to play with at the end because I do restrict myself based on my max daily loss. So here we are in the 15-minute time frame. I'm going to zoom out actually to the 1 hour too, just to show you where we're at. Wow. Yeah, that VRP is terrible. Well, I'm going to zoom back in anyway. But what I wanted to get to here is, there we go. At least the text is shrunk. I wanted to just show you we're near all-time highs, right? We had a little bit of a kick up to the 69.43, 69.55 is really where it topped out. We're nearing that. We're currently at what, 68.88, but this is a significant level. That's what I wanted to call out here. We've got touch points here, rejection, 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 and we're at that same level that it has rejected multiple times in the past. So I'm probably going to be looking for a short here, but I don't want to force myself into that notion quite yet. So far, all I'm seeing is that it looks to be a trending day and wants to break out bullish. And so I'm not putting my eggs in that short basket yet. We are just about 15 minutes into the New York Open here. You can see we've got a fair amount of bullish volume as well. So it makes me think we may be looking for bullish. And if we are, I'll show you how this is a mean reversion strategy for sure, but I've been stepping back and looking at the larger trend and trying to catch those moves a little bit more to the long side rather than the short side, always looking for that mean reversion. Now, if you're wondering what that means I'm actually waiting for it to fall, not taking that short as often, come down here to the support level, and then take the long. That's what that would mean. So right here, we're at uh, basically the Chicago Open, right, is when some of this volume starts to come in, bounced off that support level. My hope is it comes back down to that support level, and then I take the long. The longs have been working pretty well, but they are definitely teaching me some patience. Reason I say that is because shorts move fast. As they say, shorts take the elevator, longs take the stairs. It's slow, it's methodical, and that can be hard to hold through, especially on a 3-minute time frame where I'm trying to pull back and kind of look at the bigger picture, hold my trades longer. So let me show you what my week is actually looked like. I'll just jump in between here really quickly, but I don't want to lose sight of the market. I do have, in fact, before I look away from the chart, I'll show you what I've got set up on my 3-minute. I am looking for any B grade setups, any alert function call from my indicator. Just makes it super easy. I'm going to turn on the 1-minute as well to do that. And the reason I'm turning on the 1-minute is because I want to be alerted before the 3-minute comes. And now that I'm ready to do that, I'm looking here because it looks like it's going to want to fall back down below that 9 EMA. Now, critically, we have a fair amount of bullish volume in here, and that makes me hesitant for sure. You can see the 1-minute how many more false signals I'm getting, right? We had this traverse over, tap the VWAP, bounce back off. That touched the VWAP on the 3-minute, but no signal called. And that's critical there. So again, I use the 1-minute just to alert me. I'm going to stay on this just because it looks like it's going to alert me. I do have good rollover here on the top 3 stochastics. I need this third, the slow stochastic, to be a little bit closer to that 80 range to show that it actually wants to pull down. I'm not convinced it wants to pull below this level here where we've got 15K in bullish volume. So we're going to let that simmer for a minute. Let me switch my window here over to TradeZilla. So this is on my new TradeAvate account. I say new, but I've been running it for a bit here, and just want to show you what this is looking like currently. See if I can expand this without hiding completely our chart. Very good. Okay. So as you can see, I've brought over my TradeZilla account here. And then you can still see the chart in the background, so we can kind of do both at the same time. And a lot of times this is what I do. I come in here, I'll start to log things, and I'm still watching for these trades to set up over here on the chart a little bit. little bit of a split just because I don't want to keep my focus on the charts. If I do that, I inevitably will find a reason to enter the market. And it's a terrible habit. So as you can see, I'm doing okay here on my Trade of 8 account. I've got a 35% trade win rate, and I told you I was going to get into why that rate is so low. You can see my profit factor here is actually above a 1. So let me show you what some of these trades have actually looked like. I've got 5 trades here, and you can see that I'm just dealing in a lot lower volume, right? I've got a $75 win here, $66 win here, $38 loss, and then I got my decent long for a $189 win. And this was honestly the biggest mistake of the day right here, an $85 loss after I was already up by that much. Really should have not taken that last trade and got tempted by the market. TradeZella is even calling it out for me, right? You place 5 trades today, that's 67% over your average of 3. Still ended in profit, but at what cost? And I left money on the table. Yeah, I'll always leave some money on the table. I think that's okay. Told you about that last time. TradeZella really likes to say, maximize your exits. I'm doing what I can to maximize those. Had 4 trades over here, and again, you can see my losses are just tiny. $26 loss, $29 loss. Now I hit a couple of longs, $171 win, and $127 win. TradeZella says it was a deep drawdown day. I didn't feel that at all. I actually really enjoyed trading this day. Still says I'm over trading, but that's okay. I don't really think this is over trading. If I'm just, you could say it's over trading, I guess. I don't really consider it too much of over trading, and I explained why. I'm really entering a little early, yes, but I realize my mistake. I pull back and I wait for the market to come to me, and I'm just closing for a tiny loss. Now, ideally, I wouldn't enter these $26, $29 trades, sure, but most of the conditions for at least a B setup, definitely a C setup, even some of these were A setups that just didn't come to fruition. So I don't consider that over trading. If I got a B or an A setup, definitely not an A plus setup. But if I got a B or an A setup and I took that trade and it's not moving in my direction and I just pull out early, I don't consider that to be over trading. So that's where I start to ignore a little bit of what TradeZilla is telling me here. Then we're into Wednesday. Had all winning trades here. I've got a $5. This again just wasn't moving very quickly. And I need to come in here and log. You see that I have my playbook already logged on the others. Need to log these other days now. But this was a long attempt, and you can see it ticked up and immediately came back down. And I just, at that point, knew I'm back to break even. It started to run in my direction and then pulled back. That's not really something I'm interested in seeing through. So went ahead and got rid of it for a tiny little profit before it was quite break even. Similarly here at the 10 o'clock time frame, right, this $2.25. And you can see that I'm actually calling this correctly. I'm getting out of the market because this was another long attempt. Ticks up, and then it decides, no, it's going to reject. And boy, am I glad I got out of that because it would have pulled back against me quite a bit. Now, my $285 win was the right long, and that was right before that 225 at the top, where I was just trying to throw a few more lots and carry the rest of this trade. Entry here up to almost the top of this candlestick, and I think there was some hesitation up here. It was also a known resistance level if you zoom out quite a bit. So good trade there. I'll take that all day. Then yesterday, this was an over trading day. And I didn't realize I had a $12 loss there, $162 win. I'll just call it what it is. This is when I should have stopped right here. $162 win. I was green on the day. You leave a green day alone, never let it turn to a red day. I did let it turn to a red day ever so slightly, but it did turn to a red day. So I had I'll show you the $12 loss here. We'll start with that one. Again, this is a long that I kind of called once I entered and realized, nope, this is not going to go in my favor. This is on the 3 minute time frame again, so I'm watching this candlestick just not have the volume that you can see down here to push anywhere. And so I get out. Not interested in anything that's going to move that slowly. It doesn't have the momentum I want, and I am definitely a momentum based trader. Then I have my good trade here. You can see I actually scaled in on this one. So I had that top, comes down, ticks back against that 9 EMA. That's somewhere up in this level. And then it falls back below that level that I was kind of looking for. And I called this out in one of my last videos, but an A plus setup to me. I've got a dip below that 9 EMA. It ticks back against me, and then it drops below the previous close of that 9 EMA on this candlestick here. This is the 933 candlestick. That is when I take my entry, is when I'm below, and you can see I entered right below the close of these other ones, but I had that bullish candle in between, and I've learned the market has adapted. I shouldn't say the market has adapted. The market has changed a little in how it does this. It used to be I'd enter and it would just flush down. Now I don't. I've gotten burned way too many times on that. So I am waiting for it to pull back up and make that lower low before I enter. So this one entered right below the close of these two bearish. Once it closed even below that and started having some good momentum, you see this bullish or this bearish volume. Apologize. This bearish volume that comes in at 934, right? Huge momentum down to the bearish side. And so I scaled in a little bit and went ahead and tried to ride that to the bottom, but it started to hesitate down here a little bit. And I took my near $200 profit that I was looking for. Yes, it could have carried it down, but decent drawback there. It would have actually hit break even after, well, if I'd have held all the way down to there, I'd probably have been in, what was this, 6 contracts I traded. That would have been about a $400 trade. And then to have it pull back to break even, I would have already moved my stop loss, and that would have just been a lost trade, if you will, a break even trade, not a loss. So decent trade there. Here I had a $27 loss. Again, looking for the long, and it continued to pull against me a little bit. Wasn't interested. It really didn't give it much of a chance to even go up more than what we've got two, maybe 3 points from when I entered there, and then it did flush down pretty hard. So was happy to stay out of that one. Here is where we started to get into some bad trading habits. This is definitely me going on tilt at this point. I'm still profitable. I'm green on the day. Should have rested at that. And you can see that I saw it going still up a little bit. And that means I just wasn't patient enough on my $27 trade, because a mere 5 minutes later, I'm in again, long again, and have that massive flush down. Admittedly, I'm happy that I followed my procedure to get out a little bit early and not let it pull clear against that stop loss. Tried to wait until the close of that 3 minute candle there, and it was a big move. Now we're on to a $126 loss if TradeZilla decides it wants to catch up here. So now we're on to the $126 loss here. And again, this was just me trying to catch the falling knife. You see that I've reversed my position. I'm taking a short. And yes, it went down, but I didn't. I tried to hold on to it, and just wasn't a good trade. Plain and simple. Coming back, tried to reset my mindset a little bit, and took a long near the top of this. It already had some really good momentum. I could tell momentum was dying, but I was able to just take a short little trade, make up a little bit of that loss difference. I don't want to think like that. I didn't want to think making up the loss difference, but that is why I would call out that I went on tilt. That's a very dangerous mindset to think I just need to make up what I lost. That's when you tend to blow up. You lose a lot more money. You can double your losses. Obviously, I did okay here, but I don't want, first of all, I don't want you guys to think, and I don't want myself, my own mind, can think this way because I made $96 here, calling the top. Now my mind has kind of gotten some positive reinforcement from this, right? And says, "Hey, you can actually do this and you can make up your losses at the end of the day. Just take one more trade." Really, really dangerous habit for your mind to be reinforced into. And so I'm kicking myself the most for this mistake. This is the most dangerous mistake of any that I made this entire week. So doing okay here. I'll show you what this actually is looking like as far as my current account as well. Yes, I just wanted to come into my take profit trader account, show you what this is actually showing. Of course, my target's the 53,000. I've already traded this account 16 days. Started out actually immediate drawdown and just kept ticking down. Had a good build back up, almost tapped that 50K, and then back down to 49,119 is my low. Now I'm back up. Again, had that 50,202 if I'd have been able to walk away on that day, but I took another trade and that blew me back down a little bit. So we're doing okay here on this account. I'm going to go ahead and get rid of that guy, and we'll focus now on the chart and get this back into check here. Hopefully that looks more normal to you. You can see we're definitely having another trending day though, and I worried that would be the case if I zoomed out to that 1 hour again. Man, I hate when it just blows those volumes up. We've already pushed above a couple of these levels that we've tapped and resisted over here on Thursday, November 13th. That whole week, in fact, we were kind of up at this level. Had many rejections off of it. Most of the time it's rejected, but right now it's pushing to those all-time highs. And so we're out. We're sitting on our hands. That's okay. Until I get a signal that this is ready to reverse, I don't want any part of it. Now, looking at it from here, of course, you could say, hey, at 940, 939, could you have entered here? It bounced off the VWAP, crossed back over the 9 EMA. It's one of the ways that I take an entry when the market is trending. Sure, you can do that, but it was still early in the market. I don't love it. And we were already getting to some of these overbought conditions. As you can see, we were overbought here on this slow stochastic, almost overbought on this stochastic. This one was coming back down into a more normal stochastic range. So again, just not quite enough of a pullback after the first 15 minutes of the New York Open, which is what I try to restrict myself into, is those first 15 minutes before I'm looking for a trade. I mentioned to you that I've sized down a little bit. As you can see, I'm only trading 6 lots here. And again, I've been in the habit of really cutting these much, much earlier. So while we're sitting on our hands, let me tell you some of the things that I've kind of been focusing on as of late. One of them has been my mindset. I feel like I've kind of lost that mindset, especially with the government shutdown and just losing those 2 trading accounts. That's not normal for me. And I've definitely been feeling like I need a little bit of a mindset reset. So I started a new book called Trading Mindfully. Sorry, just Trade Mindfully is the actual name. It's a little bit dry, I admit, but it is really, really good at calling out how traders need to possess the know-how to handle the mental and emotional challenges of working in a highly volatile environment. It uses some cutting edge psychological techniques of trading, and it's been interesting to call better focus and more confidence to perspectives and out. It talks about a lot of things that we definitely already know. Things like trading is one of the few places where the more time you spend in it, you think you're getting better, and that's not necessarily true. Why? Because of the space between your ears. That's really what trading all comes down to. I've mentioned this before and I'll keep mentioning it because I'm such a firm believer in it. But that quote out there that is saying, when traders say it took them 5, 6, 7 years to figure this out, they're not talking about technical analysis. 100% agree. They're talking about the mental aspect and if I dare say, the mirror aspect. The market is 100% a mirror for you. It will exploit any weakness it sees in you. And that's just, maybe you could call it the best, most well-designed algorithm. It is designed to pull on your fears, on your greed. It just pulls at every single thread, any weakness it sees, and it exploits it to the nth degree. So this applies sound psychological practice, evidence-based research into the trading profession. And it's been really interesting. I'll give you one such example I wanted to just throw in here.
People make decisions under conditions of risk and uncertainty, they have a strong tendency to abandon careful, rational analysis and, instead, apply heuristics and other cognitive shortcuts. This often produces predictable errors and poor outcomes. The research was
So just that little snippet there gives you an idea of what we're talking about. And let me give you one of the stories he talks about that is these heuristics that we get into with our mindset. If you're looking at a used car to go buy, you might pull up, it's perfectly clean, pristine, it's been waxed, paint job looks amazing. You get inside, it smells good, interior looks really clean and amazing, it's not been smoked in. You might immediately think this car has been well maintained. But you've already gotten into the heuristics and kind of this false narrative in your head that it's taken evidence from other aspects to say that the car has been well maintained. But you're not asking the right question to answer if it's been well maintained. The right question would be, or maybe even the right situation, right? If you're not mechanically savvy, you'd want to take it to a mechanic and have them inspect it. But the right question would be, what does it look like under the hood? What does the engine look like? What does the transmission look like? That's how you would determine if it's been well maintained. What do the axles look like? If you're talking about trucks, that's one of the biggest things that fails all the time is they've got ball joints that can be Do you lift the truck? All sorts of things, right? Those all play into a well-maintained vehicle. Now, don't get me wrong, I'm a big fan. I'm a car guy. If you can't tell behind me, I've got some Formula One stuff back here. I am a car guy, but I know when I pull up that I have made this same mistake where I think, hey, I'm interested in someone who takes as good a care of the outside and interior of their car as they do the engine. And I automatically associate that because I do the same. When I'm maintaining my own car, I wash my car probably two two times a week, I would say, and vacuum it out maybe once a week, every other week, depending on what's needed. But I would say I maintain my cars very well. And I would automatically associate that with this is a well maintained car. And that's not necessarily true mechanically. So I thought that heuristics aspect was really, really interesting. And I just want to kind of call that out. I haven't gotten through very far into the book. I just started it this week. So I can't necessarily tell you it's highly recommended, but I have greatly enjoyed it so far because it's already calling out to me some of the fallacies that your mind can put you into without you even realizing it, right? You just use, and really what he talks about is this is the logical brain that just tries to take shortcuts. It doesn't want to put more effort into thinking through everything. That is an energy saving aspect of your brain. It says, I don't need to think about the mechanics. The paint looks good, the interior looks good. I'm sure it's a well-maintained car. It jumps to that conclusion without you even realizing it did it. It just cuts corners. And so in trading, you can see how that's so applicable. We get up here to this level. Hey, it looks like it's stalling out, even though my indicator doesn't say this is actually a level. And if I zoom out, in fact, we don't think it is much of a level. We've bounced off of an area here, a rejection area, but there's nothing that tells me this can't just keep going clear up to the top again, up to, for all we know, it could go clear up into the 7,000s, right? Just because something is oversold, or excuse me, overbought, does not mean that that it won't continue to go that way. And that's something your brain tries to just shortcut for you and say, well, we've had a bounce here, we've had a rejection here, it's probably going to bounce and reject off of this level. It might, but it's jumping to that conclusion without you really getting the evidence of it. And that's the key, is the evidence that you need. So what do? We sit on our hands until that evidence presents itself. So far, I would recommend that book. I think it's a great book. I think it's going to be an interesting read. Uh, it may be a more interesting read than an Audible book. I don't know. Can't say for sure because I haven't bought the book, but they do have some trading examples in there. You can download its PDF from the Audible. Just a really interesting concept, and I think one that we should all stay focused on. The more you can kind of get into books like this and realize what is going on inside your brain when this is all happening, the better off you're going to be. I have built this indicator. I've kind of redone a lot of the indicator to avoid so many shorts because the market continues to trend up. And then I'm just fighting the trend way too much. So that's why you're seeing it not call out as many shorts here. We've got, this one could be a short, right? If you're looking on the 3-minute time frame, it looks pretty good. But if you're down to the 1 minute, we're already in oversold conditions on the two fast stochastics. We haven't even started into the 80 range on the slow stochastics. So there's nothing to indicate to me that this wants to push lower. And then I'm going to start using again this visible volume profile, nothing about this says it's particularly bearish. It doesn't have that volume, even though I've got a little bit of an off ramp. So I'm gonna hold tight here. I'm just gonna sit and be patient. By the way, if we're being patient, and I know this is not the right channel to call it out, but I know there's a lot of sports going on this weekend. One of the big ones is Formula One. It is their last race of the weekend, and there are 3 drivers in contention for the driver championship. It's Lando Norris, Oscar Piastri, and Max Verstappen. So it's going to be an interesting weekend there in the Formula One world. If you're a Formula One fan, give me a like, give me a subscribe. I'll drop maybe randomness about Formula One on this channel from time to time, but love me some Formula One. So you can see I got a sell signal indication here. This is on the 1 minute. We do have bearish divergence here on the 1 minute, but if you notice, it did not really stay below, so kind of a false trigger here. We are overbought on everything. That's great. I'm looking for that turnaround. I would take a short in this just because we've had such a large move to the upside. Let's look at this really quick. We are from here up to here. Yeah, that's about a 0.7% move. That's significant. That's a lot. So I think we'll see it want to come back down here, self-correct, even if it's a 50% retracement. That's down to this level here at the 68.80. So we'll continue to wait here. Zoomed out here to the 1 minute time frame to show you I do have a valid entry here, a valid signal. I'm not going to say valid entry. I've got bearish divergence. I'm at the top of a range. Yes, we've looked back over on the 60-minute time frame. We know on the 1 hour time frame this level is significant. We've had rejection here. We're near all-time highs. A lot to like about this. What I don't like, it's already near the bottom of the fast stochastics on both of these. Hasn't even started here. So I need to see a little bit more movement to stay below that 9 EMA, especially on the 1 minute. Right, on the 3 minute, it's not even really closed below the 9 EMA yet. All right, we're getting into good conditions here. I like that it's closing below this. I've got 35 seconds on the 3 minute before this close of bar. And I do like to wait until I have a close of bar, but good volume moving down here. We've got some bearish volume coming in. Still really far away on those slow stochastics. Let's check the 1 minute slow stochastics here. And again, this level that I would call out, I need it to drop below this. In fact, I'll just go ahead and draw a line here. We want to know when it goes below that, so let's put a line on it. That's on the 1 minute. Zooming out to the 3 minute, you can see why I do that. This one came down, closed below, or looked like it wanted to close below the 9 EMA, but by the end of the bar, it was actually back above it. I need something to fall below that line. Again, staying light on my contracts. I'm doing 6 minis here, or 6 micros, excuse me. What I'm really doing with the 6 micros is I enter small. I wait until it's going in my favor. If it doesn't, great. I'm out with less of a loss. If it does, I can scale in. And especially when I've been focused more on the 3 minute time frame rather than the 1 minute instant scalp, I've noticed that I can hold through these a little bit better and scale in a lot better. So it's kind of changed my trading strategy a little bit, just slowing it down. And really, I think in a lot of ways, the 3 minute is the sweet spot, but takes more patience, and that's something I'm still working on. We may get an opportunity here. I'm liking it a little bit more. Again, always good to stay up on the news. You do want to be aware of this stuff. I don't call it out all that much on my channel, but I do look for it. I do make sure that I'm not trading in the wrong direction during a news event. I know we've got the Fed rate cuts coming. Seems like overall consumer sentiment is broadly somber. So their respondents are unhappy about inflation prices. I'm right there with them. If this continues to hold here the last 20 seconds, I may be taking this trade. I don't love how slow it's moving and that it's already oversold here on the fast stock. However, I don't like to stay glued to my charts either. I typically am done trading by about 9:30 and I stop looking at the market. Yeah, don't love where that candle closed. Give this just a little bit more. I'll go ahead and take it here. So my stop is right above that 9 EMA. Again, I'm definitely one candlestick. In fact, I should be a little bit more than that. I want to be at least 2 candlesticks up from there. And what I would be adding is probably about 3 lots. I'd be willing to go 9 lots on this if it continues to move in my favor. This is right at the VWAP. I'm going to take it down a little bit more. I don't know if it'll quite retrace that far, but I'm thinking of cutting through all of this consolidation we had overnight. It may touch that level again. I'm going to go ahead and scale in a little bit more. Does look like it wants to move in my favor here. See, and I would say I entered there too early to scale in. Now it's pulling against me. Definitely a mistake on my part because now I'm in the full 250, right? Now, if it taps that 9 EMA, I'm going to want out. But again, you see the kind of consolidation candles we're getting into here. So I'm hesitant to cut it too early. And if we zoom back over to the 1 minute, did it actually cross over that 9 EMA? No, it didn't. Not yet. But this is the pullback that I kind of wondered. Definitely a B setup here. That's what I would say. I'm going to scale back out. Nope, I'm just going to close it all together. Shit. Bad trade. I needed to wait until it crossed below that line. It didn't close below it. It crossed it, and I even scaled in. It got me on the scale in. So now I'm really limited in what I can do here. I may just take that loss for the day. I don't want to make it a deeper red day than it already is. Get rid of these. Scrap that. If I'm taking any other trade, it is going to be a full B setup with divergence. Excuse me, a full three minute trigger, but I would only be looking for an A setup, not a B setup. So I'm actually going to modify this, and I'll show you what I have to do here in my indicator for those of you that have it. Come over here, you do your minimum setup grade as an A now. And I'm doing any buy or sell signals and my exit signals. I'm not doing confluence. And I'm actually just focused on the stochastic exit signal, not the EMA crossover. Gives you an idea of some of the settings that I'm using here. But now I can come over and actually modify this and say that I'm only looking for my A setups, any alert function call. And now I don't have to stare at this chart. I can kind of just let it play, and I'll check in with you guys later. I may not be able to record the actual trade. Depends on how my day goes, but that's probably all I can actually narrate for now, and we'll check back in and see if we can't find a trade a little bit later.